So has the data allayed U.S. concerns over global imbalances and the strength of the yuan, China's currency? Well, David Cohen is a former economist at the Federal Reserve and now head of Asian forecasting at Action Economics. He joins me live now from Singapore. David, good to speak to you again. So an unexpected trade deficit for the month of February, actually the biggest in 7 years. How's that?
Yeah, it was a bit of a shocker, but I think it can be written off to distortions surrounding the Lunar New Year holiday. The numbers can be quite volatile at this time of the year, and I think we should see both the trade volumes rebound strongly as we move forward, and similarly the trade balance should move back to a surplus as the year progresses.
So given that you're putting this mainly down to distortions, does this mean that the surplus won't continue to narrow over the course of this year?
It's likely to narrow somewhat. Remember, it probably reflected a little bit of the higher oil import bill that China is experiencing. So we're likely to see some narrowing in the trade surplus, perhaps to the $150 billion range in 2011 from $180 billion last year. And China will no doubt attempt to point to this number to deflect the criticism from the United States and other trading partners that the yuan is undervalued. But I think we will see the normal pattern resume, and Chinese exports will reflect the same strength in global demand that we're seeing around the world in trade data in recent months.
So from what you're saying, this isn't going to strengthen the hand of those in China arguing for a slow pace of appreciation for its currency. It's not going to soothe U.S. concerns in any way.
Well, I doubt if it will satisfy Tim Geithner's complaints.
What will?
I think a recovery in the United States economy, which does seem to be progressing, is probably the best thing to soothe the nerves of Secretary Geithner and President Obama. The fact that the trade imbalance will continue can be tolerated as long as the unemployment rate continues to make gradual progress.
And I got to ask you about the rising prices. You mentioned rising oil prices there, David. How much of a problem is this going to be for the fast-growing Asian economies such as China, already struggling to deal with higher food prices, higher energy prices, transportation, rent? I could go on.
Well, yes, in fact, in his annual address to the National People's Congress over the weekend, Premier Wen emphasized prices as the key policy priority for China. And like other Asian central banks, the People's Bank of China has begun to tighten and will continue to raise rates. Today, we saw another rate hike from the Bank of Korea. Yesterday, it was the Bank of Thailand. And this process will continue as the Asian policymakers attempt to contain the building inflation pressure.
You know, David, it's good to talk to you. David Cohen.